Hey everybody, welcome back to the channel. So I caught a winner on video today and it happened this morning in AMD and I want to show it to you. It is an opening range break. I want to go through it second by second. It only took 2 minutes. It was a $400 winner, so it was a great morning for me. But I want to show you 3 alternative ways that you could have managed this trade. I want to give you kind of the 3 most popular ways to manage day trade scalp trades or even just day trades in general. This trade that I took, I applied a 2-to-1 reward to risk ratio. That's what I like to stick with. That's kind of my tried and true method. I'm going to show you that strategy for approaching the management technique, and then I'm going to show you 2 others. We'll go through them all, make sure you see the good and the bad of each. We'll see which one would have been the most profitable or the better off of these 3 for this specific trade today. And if you guys like this format where I give you alternate ways to manage a trade that I show you, drop down in the comment section, let me know, tell me you like this format, because I've been recording my trades each morning and I've got plenty of content that I can use to show you winners and losers, and we can apply different management techniques to each of these trades that I've recorded. So with that, let's jump in. So let's jump into this trade on AMD. So what I like to do is trade the 15-minute time frame. I like to trade opening range breakups, breakdowns, just anything out of the open because you have so much volume. And I want to show you that right here. You can see this first candle right here. Look at this volume bar. It's typically the largest volume bar of the day for AMD and for a lot of stocks. So that's typically why I focus on this time frame or this point in the trading day. Now you can see my trade over here, P&L of 400 on this trade, and you can see the price action just got beat up right out of the gate. Now, when I was setting up this trade this morning, I was waiting on this, and I really thought we were going to go higher, but then we dumped to the downside, and I got triggered on the downside trade. So what I want to talk about is the 3 different management types and how those play out. Now, before we get into it, I do want to show you the live trade so you can see that. But I drew these white lines on here and I just wanted to show you that here and here, this was my entry, this white line here, and then this was my exit right here. So this is a 2-to-1 reward to risk ratio. This was my entry, that's my exit, there's the profit. So with that, let's just take a quick peek at this live trade. All right, now that you've seen the trade, you've seen how it all played out, I want to show you on this whiteboard here that the 2-to-1, reward is 2, risk is 1, and right now, just to update everybody, my risk level or R value right now is $200. It was $150 in September, and now for the entire month of October, I've bumped it up to $200. So for each trade that I lose $200. For each trade that I win $400. So you can see right here today, 2-to-1 management technique for this trade produced a $400 winner with a stop loss of 25 cents and a target of 50 cents. So it did hit that 50-cent target, paid out the 400. That's my style of management. And I can show you that again right here on the platform. You can see exactly where those lines are. And you can see this was just sort of a little bit of the move. This wasn't the whole move. This wasn't even a majority of the move. So now let's talk about what would happen if you applied different management techniques. And this is where you can tailor things to fit your trading style. You don't have to follow what I do or what anyone else does. You can make a decision on your own, and in combination with your back testing, you'll be able to tell what's the best style for you. So if we look at here, let's start with one of the most common strategies for managing trades, which is a reward of 1.5 to a risk of 1. So they call it 1.5 to 1 reward to risk ratio. Now, if this would hit with my level of risk being $200, it would produce a $300 winner with a stop loss of 25 cents and a target of 37.5 cents per share. So it doesn't have to go all the way to 50, just needs to go 37.5. So you say, okay, that seems logical because that's going to be reached easier, so the win rate's probably higher. And that's true. And that's where this math gets really interesting, because if we flip back over here, you can see 37.5 cents would have been down in this area. It definitely hit. So this would have paid out $300 on the 1.5 to 1 reward to risk ratio. But here's the catch. It only pays the $300, not $400. So in the long run, if trades are hitting 1.5 and 2 to 1, the 2 to 1 is going to be more profitable. Now, if they're not hitting 2 to 1 and they're falling short, then you're going to have more losers there, and the 1.5 is going to be more profitable. But you'll see if you were to play out maybe 100 of these trades, and this is what I've done, is gone and back tested this before I started live trading it, and it was showing that the 2 to 1 was working with my strategy that I like to trade. So it made more sense for me to go with the 2 to 1 rather than the 1.5 to 1. So just to review that, 2.1 paid 400 today, and 1.5 to 1 paid 300 today on today's AMD trade 15-minute chart right out of the gate. Now for the final one, let's look at the 3 to 1. The 3 to 1 is pretty impressive because it's going to pay $600 for each winner, but it's going to have to go 75 cents. It's got to go 3 times what the stop loss is. And if you don't understand how to calculate your stop loss and your take profit and your number of shares you should be taking so that you can control your risk, I'm going to pop a video up here in the corner. Check that video out. That'll really help you with figuring out how to predict or come up with your exact share size. So with 3 to 1, 75 cents. So let's pop back over here. So we know right here at 87, let's see, 87.18, that was 50 cents. So we know it went 50 cents, so we need to go another 25 cents beyond that. So if we get to $87, which is right here, we know that's 18 cents. So that means we got to go another 7 cents beyond that. So we need to technically get to, what is it, 86.93? So let's see if it went. There is 86.93. So yes, this would have paid out 3 to 1. And just to kind of freestyle here a little bit, you can see from there, if we went another 25 cents and we were at 86.93, if we go 83.73 to 70 to 68, 86.68 would be another R. There it is. So this technically would have gone 4 to 1. So back over here, we were just looking at 3 to 1. This would have also hit 4 to 1, which would have been an $800 winner, would have had a stop loss of 25 cents, and a target of $1. So you can see the progression of this. So if you're back testing, I get a lot of questions about back testing. If you're going back through old data and you're looking at candlestick charts and you're trying to figure out what your strategy should be and how exactly you should manage it, if you're seeing consistency where you're hitting 4R targets on whatever setup you're planning or creating, you really need to think about that, because if you hit 4 to 1 on your reward to risk ratio, your win rate can be very, very low and you can still be profitable. Even at 2 to 1, I'm able to be profitable at 34%. Here's the wild thing about a 4 to 1 reward to risk ratio. If you're using 4 to 1, you have to win 20% of the time to break even. So let's say, for example, you risk $100 every time you take a trade. If you win a trade, you're going to win $400. So you win 400, you lose 100. So let's say you win 2 out of 10 trades. That's 20%, and that would be 2 trades times $400 each. So that's $800 in profits. Now, after that, let's say you lose the next 8. So now you have 10 total trades. You won 2, you lost 8. Those 8 losers are going to be $100 each. So that's going to be $800. So that means your 2 trades generated $800 and offset your losses, so now you're break even. So if you win 21% of the time, you're now profitable. That is massive. That is so important. That's the essence of all day trading. It's all reward to risk ratio and figuring out that sweet spot and then sticking to your mechanics so that you can be consistent. 4 to 1, 20%. Incredible. 2 to 1 that I like to do, 33% to break even. So you can see how the math can really be powerful and really help you out. If you have questions, drop them below, and we'll see you next time.